I'm here today with Sheldon Inwentash and his son, Jakson Inwentash. We're at their office at 130 Spadina Avenue, which I believe was the old-fashioned building. It's been repurposed into offices. It's a very nice building. It's kept a lot of its charm and character from that era. And we're here to talk about 3D Capital, both these gentlemen. Sheldon previously founded the venture capital company called Pine Tree Capital. That was a big success, from 10 cents to $26. How soon after did you start 3D Capital, your second venture capital?
2 or 3 years after, because Jakson, he was in university at the time, and then he worked for a couple bankers, BMO and another boutique banker, and wanted to get into business. And I love this business. I'd rather talk about art, which I can tour you around afterwards, but it was a motivation for me to start, I'll call it Pine Tree 2.0.
Awesome. If we can, let's go a little bit back, just to understand your motivation and how you got into the industry. How did you get started? Like, did you graduate from university? You got into full time, or you thought, this is where I want to be right away? I want to be a company builder. I want to be someone who can incubate startups. I want to be there to support smart entrepreneurs in Canada. Like, how did you get started? Where was it?
You're going way back. Now you're
Let's do
testing
it.
my memory. So yeah, listen, I went to University of Toronto, got my Bachelor of Commerce, and then decided that I wanted to be an entrepreneur, but entrepreneurs fail. So what can my backup be? So I decided to become a CPA. So I went to Price Waterhouse, spent minimum time there, 3 years. But because of my experience on the Imperial Oil audit, I had a real interest in oil and gas. So I applied, and against a lot of other people, and got accepted for an oil and gas position analyst at a major life insurance company at the time, North American Life. Then I helped them buy a company called Elliott and Page, and then next thing you know, I'm vice president of all these things, and then I built a major oil and gas interest for them. Anyway, it sort of evolved. I got a lot of experience, and I founded a number of companies for them, and I realized that's what I wanted to do. So I then went out on my own and founded a business in nuclear medicine, sold that, and then I started Pine Tree Capital. So I got the bug. I've never lost it for creating companies out of nothing, if you will, basically around people and products or properties. So I have a pretty extensive background from, energy, minerals, and technology, and biotechnology.
And during that tenure at Pine Tree, as soon as you founded it, obviously commodity hungry China was just gobbling up commodities around the world, right? And I think bringing mining companies public, junior oil and gas companies, I think there was such huge tailwinds at the time. I believe for Pine Tree Capital.
And also I founded a biotech company called Visible Genetics out of the University of Toronto. Took it public at $2, went to $110, sold it to Bear. So I kind of was multi-tracking many businesses at the time. The original thesis around Pine Tree was not for energy or minerals or resources. It was really around tech and biotech. And then in the year 2001, after we exited Visible Genetics, I reconnected with Eric Sprott and, bought into his thesis of where gold and silver and all that's going. So probably became one of the largest players in that space, as well as uranium. And so I did that very actively starting at around 2002.
Okay. With you exiting Pine Tree in 2012, I believe that bear market, it wasn't expected to be so prolonged, right, in the mining industry.
Yeah, it killed a lot of projects, and when you're in the business where you eat what you kill, the only way you make money in an investment firm is you sell something, and then everything was illiquid. Very challenging time, challenge to raise capital for these companies. Many companies sort of ran out of money, basically failed, and it was a challenging time. And actually in the junior market, it's only starting to turn now. It's been challenging for a long period.
Okay. So now, as you called it, Pine Tree Capital 2.0, which is 3D Capital today, traded on the CSE, Canadian Stock Exchange. Do you find now there's a lot more opportunities in tech than there are in junior oil and gas and mining? Is this the majority of your portfolio today?
Well, I would say there's more opportunities now than there's ever been, because we've been very active. For example, people talk about AI. When ChatGPT came out as a solution, large language model, most people thought that was the beginning of AI. We've been in AI for almost 7 years now, and we have many companies that are beginning to mature. When I say mature, commercialize. In micropayments, we're involved in the internet AI, we're involved in AI for smart cities. We've got a lot of applications. So we've been more deeply rooted in, and I'll call it the tech space. We also have a bit of biotech in the area of longevity, but I have started to get more involved in the mineral resource side as well. So, but right now I would say it represents around 25% of our portfolio. That will probably rise. I'm flying to Malaysia on Friday for what could be the richest copper project in the world, of which we're getting involved in. So we're starting to look at more things in the resource side. And we also stumbled upon a company. We've been looking in the area of technology because we were quite involved in clean tech at hydrogen. But hydrogen was very much a technology process involving very substantial proprietary IP, where everybody had their own method of creating hydrogen through synthesis and electrolysis and all kinds of different colors of hydrogen. And we looked at many companies. They were very capital intensive, very complicated technology wise, and we stumbled on a company that was looking for geological hydrogen, and that's Bill Gates' way of saying hydrogen in the ground, like you find natural gas. So this was something that we stumbled on maybe 6-8 months ago. We've become the largest shareholder, and because they've hit natural hydrogen. So that is an area that we didn't anticipate. We're opportunists, obviously, and now it's something that's very important to us. Jackson's become chairman of the board. We're the largest shareholder. We think it's an extremely interesting company. So yes, we have our historical tech, but we also have some historical mining. But now we've got hydrogen, and we're continuing to be very aggressive investors and looking for new projects as well. We have a YouTube channel that only reason I bring it up is that we interview all the founders and CEOs there, and I always like to say, rather than listen to me, listen to right to the horse's mouth. And there's some really interesting companies there, and these companies that I've mentioned have been interviewed. So there is public content out there on these companies that we're mentioning in 3D. So I encourage people who are curious to go down that rabbit hole.
People are curious about the hydrogen-based company. Can you name the company and the ticker symbol? I think they're on the CSE exchange.
Sure, no problem. So the company's name is called Quebec Innovative Materials because its historic property was in silica. And we were approached about silica, but it's very plentiful, but very strategic, but it really was not our interest. And that's when we found out that they had staked all this very strategic hydrogen bearing systems back in 2022 in partnership with the government, INRS, which is full of PhDs. So we started looking at technical reports, and it didn't take me long to realize that this hydrogen is actually an intersection between the mineral world and the oil and gas world. It's in terms of those disciplines. So this is very, very new. So the company's name, we're hoping will get changed to Quebec Hydrogen or something like that, because it will be, and it is a public company. The symbol's QIMC, so Quebec Innovative Materials on the CSE. We looked at it when it was just a shell with staked claims 6 months ago at 3 cents. We did the financing at 3 cents. It's now 30 or 33 cents, something like that. But it's early days because we believe that we have something very, very substantial here. It's not proven up, but what the company has done, if you want me to go into a bit of detail
Sure.
about it, because it's actually the thing that I'm talking about most and most excited about these days. So we have a group of PhDs that are part of the Quebec government, INRS, and they have helped us fund the search for natural hydrogen. And Quebec is an extremely supportive province for anything clean tech. And hydrogen has a zero CO2 footprint, so it's the holy grail. But we believe we're one of the first movers in this space. The Gates Foundation and Bezos has put up hundreds of millions into a company in the US, Fortescue, the fourth largest iron ore companies involved, Total is involved in the Pyrenees, and everybody's looking for it, but no one has found yet commercial hydrogen. So the group from the Quebec government are exceptionally qualified and knowledgeable about how is hydrogen produced at subterranean depths. And it involves very specific rock types in iron formations and gabbros that basically interact with basement water, and water is H2O, so it creates the hydrogen from that, but it needs to be its own natural synthesis. It heats it up in its own way. And then what happens is hydrogen, which is number one on the periodic table, or is the lightest gas there is, through fissures and cracks, it finds its way to surface. So unlike, say, oil and gas, where you have to do seismic and you have to spend a great deal of money in a virgin basin before you can find anything, through certain sensor techniques, they're called sniffers or whatever, they basically put something like a tube that goes 80 centimeters into the soil, and it's done every many meters. And then you have almost like a balloon or a bag that's on top of it that would capture the gases that come out. And so this was almost, ground floor prospecting, if you will. If you looked at the mining industry, they walk around the surface, you look at some rocks, you break the rocks with a chisel, and you look if it's the right type of maybe mineral-bearing rocks, quartz for gold, and anyway, and for different base metals, there's different rock groups. So this is the first prospecting technique. And lo and behold, we got readings that were better than I think any company on planet Earth has ever gotten for hydrogen that's come out of, they call the soils. And again, our technical team has already done 6 years of work on this, so they knew exactly where to go. And QIMC controls 95%, this is their terms, not mine, of all hydrogen potential bearing rocks in the province of Quebec, which is mind-boggling. If you think of that, we drove to the property from here in Toronto. It was 5 hours. It's 5 hours from Ottawa, 6 hours from Montreal. So in hydrogen, if you get to the point where you're producing, location is extremely important because of transportation costs. Well, you have almost half the population of Canada in Quebec and Ontario, and then you have over 100 million people on the eastern seaboard. That's also not that far. Quebec Hydro, I think, provides 20% of all New York State energy needs through natural electricity. So again, going back to it, we had these great numbers that go, whoa, ostensibly says that you might have a discovery, but you still don't know what's subterranean. So last week, the company's been doing a lot of work. It released geophysical information that basically has taken the whole theory of how the hydrogen's produced, where it concentrates itself, which are basically reservoirs. And my understanding is you have a primary reservoir, and then it feeds second and third and fourth reservoirs. And what's extremely interesting about hydrogen in a basin where there's a great deal of water is that when you take the hydrogen out of the reservoir, it actually reproduces and refills those same chambers, because what's happening at depth, the interaction between the rocks and the water, it doesn't stop. It,
Mhm.
like, in other words, in oil and gas, you take out the liquid, and that's it. You take it out, there's nothing that left. In mining, you take out the mineral,
Yep.
there's nothing left. But this, you don't take out the liquid, which is water, you don't take out the minerals, but the interaction between the two create the gas. So this is an extremely unique. So imagine the NPV of an asset that never depletes. So it's actually mind-boggling in terms of business models of anything I have ever seen in the resource space. So if these dots can all get connected, and my sense here is they all will within 6 months, then we are looking at one of the most significant assets that one can think about, because hydrogen is extremely expensive to make, man-made. And if this can be done in what's called a geological hydrogen format, the costs of production are extremely low. So it would be extremely competitive. If you look at the number of press releases a day by countries or companies in the hydrogen space, it's just exploding. And I can go on and on about a number of them that are making big commitments to finding geological hydrogen, because at the end of the day, is an electric car a CO2 flat footprint? No. I'm involved in mining. I know, how much CO2 is created in finding a mine and then putting it into production? It's a joke. And also, there's not enough minerals in the world to build all the batteries that are necessary for the electric car. The first breakthrough that finally gave everybody the sense that this is where it's going is Tesla announced 3 weeks ago. Now they're going to build a hydrogen car in 2026. They were not going to go there. And the reason for that is hydrogen, before that, people still couldn't manufacture it. Now, through geological hydrogen, it could be that source. So we are in a game-changing space. As I said, Bill Gates has said this is the biggest energy revolution of our lifetime. He's in it, putting his money in it. We spoke to his company called Breakthrough Ventures, and you know what? They're looking at QIMC, as are many other sophisticated players in the space. Most people don't really understand how this all works. So it's early days in terms of being a public company, because most investors, they can't point to this or that. There's a lot of experience in oil and gas, but this isn't oil and gas. There's a lot of experience in mining, but this isn't mining. But for those that really want to understand it all and read a lot, this is perhaps the most exciting thing we're involved in, and we're involved in a lot of exciting projects.
So you may have already answered my question, but when it comes to inputs into batteries for electric vehicles, for example, cobalt, nickel, lithium, etc., any of your portfolio companies are mining for those?
Yes.
Okay. Can you name some?
Yeah, sure. Well, we're not mining, but we're about
Okay.
to go into production.
Okay.
So I'll call that, everything else is exploration. We have a project in Botswana that we acquired from the Botswana government a few years ago. It's a whole long story. I don't want to get into it. But this could be one of the largest nickel, copper, cobalt mines. They already announced a resource of almost 28 million tons of, I think, 3% nickel equivalent, which is very high grade. And the infrastructure there, it was an old mine that we're going to put back into production. So the company has talked a lot with the US government, because these are strategic metals. But the strategic metals for the US government is not for the EV industry, it's for the defense industry. But yes, I'm very familiar with the whole mining space in terms of how that relates to CO2 footprints.
I remember reading at the peak of Pine Tree Capital 1.0 at the time in the early 2000s, people would just pick up the phone and they would know who to call. It would be you and a handful of other people. Is that the case now? Do you find that now that you're breaking more into AI, blockchain, other tech investments, do you find that people know you, they reach you, or do you have another sourcing process that you take on your side?
I've never had to advertise for deal flow. Just been around for 100 years. Also, we have many projects around the world. We're not just in Canada. We're partners with SoftBank in a project in Taiwan. You know, we're partners with some major Korean and other companies in our longevity initiative. So we got a project out of Harvard that is launching right now for headsets that basically can read your electromagnetic waves in your brain. And a company called Neurable, very exciting. Again, one of our YouTube interviews. So we are in many, many industries, but we have an extremely robust deal flow.
Okay. I would love to be a fly on the wall in one of those meetings. How does that first meeting go with a company that wants you to write a check and maybe be more involved, like involvement on the board? How does that first meeting go? What are the key questions that you ask? What do you want to tease out of the management teams and the founders?
Before we meet them, you know, we like to get the PowerPoint and look at to see whether it meets our criteria, because we don't want to waste the company's time. We don't want to waste our own time. We know what industries we like. We know the stage of where the company's at, and all those things sort of are pre-qualification. I mean, it doesn't mean we're going to invest if we meet with them, and we meet with companies every single day. And you know, it all depends. Sometimes it's about the people. Sometimes it's about the products. There's no cookie cutter definition or recipe. Every situation is different.
Happy to. I mean, I think Sheldon brought up a lot of good points. I mean, usually it is a lot about the people and the product, and you know, meeting kind of our criteria, which, you know, as Sheldon mentioned, isn't you know, the cookie cutter, but you know, in terms of general thesis, we look for things that are early stage or valuation contrasts. We see things that could have potential huge growth, and usually like to be, you know, first movers or pretty disruptive ideas, like, you know, with this geological hydrogen, being a first mover in this space, being a first mover in the you know, fintech in the micropayment space, solving issues that have, you know, plagued industries for decades, that you know, once solved can you know, go parabolic. So that's kind of like what we like to get involved in. But I mean, there's, you know, I mean, we move pretty quickly because we're efficient and know what we like and the questions to ask. But you know, we'll do a comprehensive due diligence. You know, first call is always an introductory call, understand, you know, whether we like it, and then, you know, we'll dive deeper to make sure that there isn't anything that we're missing, and understand more about the business model, the industry, and so forth.
Well, we can stay on you, Jakson, if you don't mind. You know, with you being on board here for Pine Tree 2.0, 3D Capital, what fields or what ideas have you opened your father to that maybe he was hesitant to invest in the past? I'm sure you've brought a new lens, right, as the new generation. I'm curious.
Yeah, I wouldn't say hesitant to anything, because he's pretty open to new ideas when they're pretty disruptive. I think one area that we've started investing into, that I brought to him, was really in the area of longevity research. I kind of you know, explained to him that the technology around aging and modulating aging has actually really progressed in biotech, and you know, he obviously, as he mentioned, has experience in biotech, so was, you know, open to the idea. You know, introduced him to a few companies, and we ended up investing into that. You know, it's kind of become a growing portfolio. One of the companies that we're involved in, co-investors are like Coastal Ventures, other major Korean and Japanese firms. It's a company called Turn Biotechnologies, and they just recently signed a $300 million phase one non-dilative deal, focused on mainly around eye therapies, and this is really a platform technology, which is what we also like to get involved in, things that have multiple applications based off of the same underlying principal technology. So I mean, that's one area I'm very knowledgeable about, passionate about. You know, go around for conferences. One of those things that have pretty good deal flow. It's also, you know, it's the type of deals are the ones that, you know, we tend to find end up being also a lot of times what works out the best. And so I mean, yeah, biotech is a pretty, you know, growing area in one of our verticals, and seems to be doing quite well, and it's pretty exciting. And you know, this company should be going into human clinical trials next year, so that's pretty exciting as well. So something I'm quite passionate about. I think it's a massive industry, potential to disrupt the whole healthcare industry, and it's all about, in my opinion, making people live longer healthily, not just living longer in sickness and illness, which is a growing problem not in the U.S. but globally. So that's kind of something that we're really passionate focused on, and I think we have a good expertise of figuring out which companies to invest into on that.
That's super interesting. Yeah, if companies are cracking the code on extending life, that's just amazing, quality of life. So well, what I'm hearing is going to be 3.0, 4.0, 5.0 of pine tree for many years to come.
2.0.
Got
It's just,
it.
it's all going to be under the same umbrella.
So on that, what's your vision? What do you want 3D Capital to be in 5 to 10 years? What successes do you want to have under your belt if we look out?
Well, I think it's going to be varied and across industry. So if you're the real operative question is for the average, and by the way, I can say institutional, but let's say retail, who wants to invest at the earliest stage of a company's evolution, which is what we do. So you're basically investing in seed stock. We get involved in almost all of them. They ask us to be an advisor to help them build the company. We've raised over $30 billion for our own projects, so we know how to get capital, but we also know how to scale these businesses and commercialize them. And right behind you on a whiteboard, which is my wall, every wall in my office has turned out to be a whiteboard. We've been working for 7 years on a company, for example, in the area of micropayments. We're launching now with Oracle, Google, and CIBC and RBC are let's call it fiat on-ramp, off-ramp partners, that you're going to now be able to buy something for 2 cents. And I'm saying buy it, you're consuming it. You're listening to a song, you're reading an article. You don't have to pay for a subscription model. Oracle believes we're going to disrupt almost every single business model out there. Because today, it might cost you 25 cents to $1 to process a transaction. KYC, counterparty, all kinds of things. Middlemen. We avoid all of that through what we call the TAP, T-A-P-P. So you mentioned Well Health before. We're partnering with Well Health's affiliate so that now everybody can do certain things that are about your health and do it as a transaction as opposed to a subscription. So this is hugely disruptive. The numbers that Oracle and Google think the value of this company could be can rival Stripe and any of the others as let's call it as a payments platform. But it's way bigger than that. So we're going to be part of companies that are literally going to not be a unicorn, a billion, but much, much bigger. So my vision is, starting 7 years ago when many of these things we started in, and not everyone was 7 years ago, that we're going to have strategic interests in many, many companies and many verticals. So where do you get exposure to that type of portfolio? And by the way, you don't have to keep calling management, trying to figure what's going on. We sort of do that. Not that we're right, and management can be wrong. We can be wrong. It can all be there. But the average person won't get shown a deal at a seed level, and then we'll never know really how that company is operating, especially if it's private. So we're excited about all these, and then we stumble upon hydrogen, where I can tell you the world's going that direction, and we're first mover. So we identified it, we invested. Jackson's on the board. We're embedded within the company. We're confident about it. So any investor can kind of look at it and go, geez, how do I invest in these things? I'm going to hear some promoter call me, or my broker's going to call me, and he's probably not even done his homework. And then people just end up losing their money. So not that you're going to necessarily make money with us, but at least, we have a track record of having many, many exits over $1 billion historically. So we know how to do that. And that's sort of the value proposition of what the investor should look at of who we are. We're like a public VC firm, but we don't have the 2 and 20 and all the overhead that those companies seem to have with them. And now that, in many funds, you tied up for 7 years, you can't take your money out. Here, you can buy the shares, you're unhappy with it, or you need the money and you got a divorce, or got to buy a house, or whatever the situation is, you get access to liquidity. So And we're diversified. And I think that that is an appealing proposition for some.
There's a photo behind you, Jakson, of your father with Warren Buffett. Sheldon, what year was that, and what was the occasion?
What year was that? Let's call it 15 years ago.
Yeah.
David Foster, who I know, was putting on a benefit. Muhammad Ali was there. Lionel Richie was there. It was a load of starlets, and it was a fundraiser for organ transplants. And yeah, so I met Warren, talked to him, and he obliged to have a picture, and he's a good guy.
Yeah, awesome, awesome. Did we miss talking about any companies that are highlight companies in your
Many.
portfolio?
Many.
Can we talk about them now?
No, I think that people have to first look at the business model.
Yeah.
They have to buy into the fact that this is what we do, and I think understand that. My objective is we don't enter into a project unless we can make 50 times our money. So that has to be acceptable to people's risk return flavor and bias for risk. Okay, so people say, "Oh, what you do is very risky." Yes, because the future's unknown. But I'm not buying a $20 stock that makes one mistake and next thing you know it's $5. You know, we might buy in at 5 cents and 10 cents a share. And then what we do is we add to that based on milestones. So as the project gets de-risked in our mind, we continue to add in every round. And we're often the lead investor and the largest investor. So that's important. As for the companies, the way that I'd rather leave it is people visit our YouTube channel. And, you know, we have, I don't know, 15 interviews.
Yeah, probably around there.
Yeah, we have 60 companies in our portfolio, probably a bit more. We don't talk about all of them. We only talk about the meaningful ones and the ones that are commercializing. We don't want to arm wave and say, guess what? We're trying to develop the next big widget, and no, that's promises. But the reason that we're even having this conversation today, and the reason that I've come out after 7 years of stealth this year, is because Micropayments is commercializing. Our AI company for the headphones for reading your electromagnetic waves in your brain, that's commercializing this month. So I'd rather talk about what we're doing, not what we hope to do. But the YouTube channel's filled with a bunch of interesting interviews. And then, if we have a chance to speak again, perhaps you or your audience will have looked at those and go, you know what, you talked about hydrogen last time, very interesting. And by the way, there's constant updates through AMAs and other podcasts about that hydrogen, so it's not static. But then maybe on another conversation, we can talk about another one or two. To talk about 5 companies, 10 companies.
60 companies could take days, right?
It'll take days, and then people will forget what's
Yeah.
good and what's not good. And I think less is more in the short run. And then in the fullness of time, we're happy to talk about everything.
Yeah. This is great. We've talked about some of the top exciting companies for you and your son. Outside of this world, your passion is art, collecting art. What was the first acquisition you made? Piece of art?
Yeah, bought a Sean Scully work from 1982.
Yeah. And how many since have you purchased? And
Oh, it's a big number.
yeah. And your favorite, your all-time favorite that you just love would be which piece?
No, it's like I love all my children. I can't say I love one more than the other. In my office here, in fact, I'm happy to give you a catalog I just published, just on the few pieces we have here, all emerging artists. I just took 30 people through this space last Friday from Art Toronto. There was a big art fair in Toronto, so the whole board came here. And the one thing you'll find about the art I collect is you're very low probability you've heard of the artist's name, but they're all merging and they're all moving towards big careers. And when I look at the art world and what I do there versus the investment world, it's the exact same. I'm betting on a person at the beginning, and I'm believing whether or not they can execute on their beliefs and their talents.
Yeah.
It's the same thing. And for that reason, I've actually had an extremely successful track record in art of those artists becoming very relevant. So yeah, that's what I got to keep working, because it's an expensive habit.
You have the vision in the people and the artists, the jockeys as important as the horse, right?
Absolutely.
Who's there behind the painting?
Absolutely.
Yeah.
Very important.
Winery in Italy as well. You opened that. I think it's a winery, and is it olive oil as well? You produce there?
It's a boutique hotel.
Okay.
It's about, I think, 700-year-old hotel.
Yeah.
Financed by the Medicis.
Yeah.
Outside Florence, and it was a women's convent, and we've turned it into 14 rooms, like a bed and breakfast. We have a 5-star chef, Michelin, sorry, star chef. And we produce Sangiovese grape. So we have one that's in Parker's top 90 plus percentile, as well as we produce olive oil. So it's it's called Le Cavane. It's a beautiful property, great views, Tuscany. It's nice.
That's outstanding. When it's going to be getting cold here, which is soon, we're approaching November. You find yourself wanting to go out to the hotel and
Not really,
hang out there more
because
often?
it's cold there, and our season is only from May through October.
Yeah.
So we're sort of and it's very hot. I don't know, last few years in Italy is extremely hot. But that's the window.
Yeah.
Now in the winter, I have a place in Miami, and I go back and forth.
Wonderful. You're going to be heading out to, I think, Eric Sprott's 80th birthday.
Yeah, 2 hours.
How far back do you know Eric, and how did that come about?
Yeah, I know Eric from when he almost started his brokerage firm, maybe 40 years ago.
Yeah.
Like me, he started his career as a CPA. He's a numbers guy. He's a great visionary. He's a great friend. We do a lot together, business-wise. He's going to have a big celebration, and good for him. I was at his 70th. Didn't seem like it was that long ago.
Yeah, it's going to be the 90th and 100th, and if the longevity product commercializes, and many more.
I told him that. I said, I'm going to keep you on the pulse. And it's called health span, not lifespan.
Okay.
But how do you live longer healthily?
Yeah, well, quality of life too matters.
And they've been able to figure out how to reverse engineer and put your clock back. And it's like reprogramming a software. It's called your epigenetic clock, and it's real.
Yeah.
But the drugs are still 3-4 years away.
Okay, so last question. What was the biggest lesson he imparted onto you, and then vice versa, that you imparted onto Eric?
Well, I'm not going to say that I've taught Eric anything other than I warned him about Bitcoin being a headwind for gold. So I think he's realized that that's true, but I told him that 10 years ago. And for me, you know what? He's got a lot of patience. I'm not as patient a person as he is, but you know what? He looks at, he's very good in macroeconomics and staying with that conviction. The toughest thing in this business sometimes is seeing things through to the end. And that takes staying power. And he has staying power because he's very smart and he keeps making enough money to do it. Not the average person has that. So, it's something to always keep in mind. It's easy to lose perspective when people watch stocks every minute or every day or every week. Businesses and cycles take a long time to evolve. And that's a very challenging psychological task. So I would say, yeah.